Okay, today I want to share a few thoughts on how it can be very, very difficult sometimes to value an equity, to know what a stock should be worth or what it will be worth. Remember that equity holders, stockholders, have a claim to all of the residual profits or cash flows of a company after the debt holders have been made whole and after all the expenses have been paid for operating the business. So sometimes you have a situation where it's very unclear whether there's even going to be a residual at all. Great example might be an airline during the COVID environment. Or, for example, this is on my brain lately, I have this company called Sequential Brands, very small investment. It's totally speculative because this company has a mountain of debt. They have an atrocious balance sheet. But there's a tiny chance that this company actually could make it. There's a couple things have to happen, and there's going to be a luck factor in this particular investment. But the assets minus the liabilities of this company are about $77 million. The market cap of the company, as of yesterday, was about $11 million. Today, the stock is up something like 30% because they printed a quarter that was much better than expected, and it looks like they might make it, maybe. So you get these these explosive moves, 20 and 30% moves, or even a doubling of a stock sometimes, or a halving of the stock, if the case may be, when it isn't clear exactly whether there's going to be residual cash flows above and beyond meeting the liabilities to the creditors. And so when you have sort of a potential bankruptcy situation, or a company with very high fixed costs and like a disruption in their revenue, you can have enormous moves in a stock, up or down. So when COVID hit and airlines basically had to shut down operations, they had this stream of fixed costs that continue relentlessly, but no revenues. And likewise, an automaker is a good example of a company with pretty high fixed costs. And if they're not running volumes through the plant, there aren't going to be any profits, and there's going to be serious losses. So, you kind of want to be aware of these issues where sometimes things can really swing in big directions, one or the other. Another example might be FNMA, which right now there's a set of court decisions that should be happening fairly soon about who actually gets the cash flows to this company. Right now they're all going to the Treasury, and that's potentially not legal. So there might be a court decision to actually redirect these cash flows, and if that happens, then that's the stock, ticker FNMA, it's going to go up a lot. Likewise, for example, there's an industry of municipal bond guarantors, so ticker AGO, Assured Guarantee, or ticker MBI, which is MBIA. These are companies that are willing to backstop municipal bond issuances. And so if, say, Puerto Rico, which just had a bankruptcy a couple of years ago and it's still being resolved, we'll see how that plays out. That would significantly impact the amount of liabilities that a company like AGO or MBI have to pay. And so this company may have an enormous change based on certain agreements that happen at a bankruptcy court somewhere. So in general, you want to avoid many stocks that have this kind of delta, this kind of potential change in scenario, because it's out of your control. And so in general, you want to just avoid companies like this, or only consider them truly speculative and treat the size of the position or make the size of the investment small because of the level of speculation inherent in the investment. I hope that's helpful, and as always, thanks for watching.